Crypto, baby, it's the Wild West of finance, a place where fortunes are made and lost in the blink of an eye. Bitcoin, Ethereum, Dogecoin, names that get your blood pumping like a triple-shot espresso. These digital currencies have taken the world by storm, promising untold riches to those who dare to invest. And the stories, people making life-changing money overnight, tales of ordinary folks turning into millionaires seemingly out of nowhere. Suddenly that beat-up Honda Civic doesn't seem so appealing when you could be cruising in a Lambo. The allure of luxury cars and extravagant lifestyles is hard to resist. The dream is seductive, escape the 9-to-5 grind, become your own boss, trade pajamas for profits. Imagine working from the comfort of your home or even better from a beachside villa. Social media is a highlight reel of crypto success, filled with experts promising to unlock the secrets to instant wealth. Influencers flaunt their gains, making it look so easy. Who needs a boss when you have a Bitcoin? The idea of financial freedom is intoxicating. But hold on a minute. Before you quit your day job and invest your life savings in Shiba Inu, let's talk about the reality of full-time crypto trading. It's not all sunshine and rainbows. Because behind the flashy headlines and Instagram influencers, there's a darker, more complex truth. The volatility of the market can lead to significant losses and not everyone comes out a winner. Here's a dose of cold, hard reality, 97%. That's the staggering percentage of day traders who end up losing money. It's a sobering statistic that should make anyone think twice before diving into the world of day trading. According to some studies, the vast majority of day traders don't just fail to make a profit, they actually lose money. Imagine spending hours glued to your screen, analyzing charts, and making trades, only to end up in the red. That's right, you have a better chance of winning the lottery than making a living as a day trader. The odds are stacked against you and the house always wins. It's a high-stakes game where the majority of players walk away empty-handed. The crypto market is volatile, it's like riding a roller coaster, in a hurricane, during an earthquake. The ups and downs are extreme, and the emotional toll can be overwhelming. One minute you're up, the next you're down. Emotions run high, and fear and greed can lead to impulsive decisions that wipe out your savings faster than you can say, Satoshi Nakamoto. The emotional roller coaster can be exhausting, and it's easy to make mistakes when you're under pressure. Remember Trump coin? Yeah, that was a thing. It was one of those hyped-up cryptocurrencies that promised the moon but delivered little more than heartache for most investors. Some early birds made a killing, but over 810,000 others? They lost a combined $2 billion. That's a staggering amount of money, and it shows just how risky and unpredictable the market can be. That's billion with a B, folks. The Trump family meanwhile walked away with a cool $100 million in fees. They made their money regardless of the market's performance, leaving the average investor to pick up the pieces. Not a bad day at the office. While the big players continue to profit, the small investors often find themselves out of luck and out of pocket. It's a harsh reality, but one that needs to be acknowledged. Let's talk more about Trump coin, shall we? It's a perfect example of the risks involved in crypto trading. Launched in January 2025, it was marketed as the future of digital currency. People went nuts, pouring their money into it. The price skyrocketed, then just as quickly, it crashed and burned. This is not an isolated incident. The crypto market is littered with stories of scams, pump-and-dump schemes, and outright fraud. Remember Squid Game coin? Yeah, that rug pull cost investors millions. The point is, if it sounds too good to be true, it probably is. Section 4, Capital, Risk, and the Brutal Math of Trading. So you still think you can beat the odds? Well, before you dive in headfirst, let's talk about capital. You need money to make money, and day trading requires a significant chunk of change. We're talking at least $25,000 in the US, just to be considered a pattern day trader, and even then, there's no guarantee you'll make a profit. And don't forget about risk management. This isn't gambling, though it can feel like it. You need a solid plan, one that includes stop-loss orders and profit targets. You need to know when to hold them and when to fold them. Because in the world of crypto trading, one bad decision can wipe you out. Section 5, Skills, Discipline, and the Psychology of a Trader. Here's the thing about trading, it's not just about numbers, it's about psychology, it's about discipline. Can you keep your cool when the market is tanking? Can you resist the urge to chase after the latest meme coin? Can you stick to your plan even when your emotions are screaming at you to do otherwise? Successful traders are like Jedi Knights. They have mastered their emotions. They have the discipline of a Shaolin monk. They understand that fear and greed are their enemies. They are patient, analytical, and always learning. They are the 1% who actually make it. Section 6. The future of crypto regulation, competition, and evolution. So, what does the future hold for crypto trading? Well, it's complicated. The landscape of cryptocurrency is ever-changing, and predicting its future is like trying to catch a wave in the ocean. There are so many variables at play. Governments around the world are starting to crack down on the wild west of digital assets. This means more regulations, more oversight, and potentially more hurdles for traders and investors. Regulations are coming, and that could change the game entirely. These new rules could bring stability, but they could also stifle innovation and limit opportunities for smaller players. Meanwhile, institutional investors are moving in, bringing their algorithms and high-frequency trading bots with them. The competition is fierce. The landscape is evolving. Traditional financial institutions are no longer sitting on the sidelines, they are diving in head first. What worked yesterday might not work tomorrow. Strategies that were once profitable could become obsolete overnight. The market is in a constant state of flux. The bottom line is this. Full-time crypto trading is not for the faint of heart. It requires resilience, adaptability, and a willingness to take risks. It's a high-risk, high-reward game. The potential for significant gains is there, but so is the potential for substantial losses. It requires significant capital, a deep understanding of the market, and the emotional discipline of a Zen master. Staying calm under pressure is crucial. If you're not prepared to put in the time, effort, and yes, money, then you're probably better off sticking to your day job. The world of crypto trading is not for everyone, and that's okay. It's a journey that demands dedication and a high tolerance for uncertainty.